A sandwich shop just told Wall Street it uses artificial intelligence. Not a tech firm, not a startup. Jersey Mike's, the place that makes your Italian sub, when they filed to go public, buried in the legal paperwork was language about AI. And what it reveals about this entire moment in tech is uglier than any product launch. There's a twist here almost no one is talking about. Here's why this matters right now. Jersey Mike's, the New Jersey chain with thousands of locations, filed its IPO paperwork to sell shares to the public. Blackstone, the private equity giant, owns a huge stake and wants to cash out. IPO documents are legally required to disclose risks and strategy to investors. So what a sandwich company chooses to write in that document tells you exactly what it thinks investors want to hear. And that's the tell. Now, according to TechCrunch AI, the writer went digging through those filings on a lark. The assumption was reasonable. A sandwich shop slings cold cuts and bread. There is no earthly reason it should need to talk about machine learning to sell you a turkey sub. What could a submarine sandwich franchise possibly have to say about neural networks? And yet, there it was. The filing mentions AI, not once as a throwaway. It's woven into the language the way a tech company would use it, as strategy, as risk, as something the business is supposedly leaning into. Think about what that means for you personally. When you buy shares in a company or when your pension fund does, you're trusting that the disclosures describe the actual business. Instead, you get buzzwords engineered to catch the eye of investors who've been trained to reward one magic phrase above all others. A like on this does more than you'd think to get it seen. If you want more of these breakdowns pushed to people who need them, that's the lever. So why would a sandwich chain do this? Because everyone else is doing it and the ones who don't get punished by the market. Most coverage stops here. The real story doesn't. Here's the part that actually matters. This isn't a Jersey Mike's problem. It's an epidemic. Over the last 2 years, companies across every sector, retail, food, logistics, insurance, have started stuffing AI into earnings calls, press releases, and investor filings because saying the word moves the stock. Analysts have documented this repeatedly. Firms that mention AI on earnings calls get rewarded with higher valuations, whether or not the technology does anything for their bottom line. That creates a perverse incentive. If mentioning AI lifts your share price and staying silent gets you dinged as behind the times, every executive rationally chooses to talk about AI. Even if the reality is a chatbot on the website and a scheduling tool in the back office, the villain here isn't Jersey Mike's. Blame the machine that rewards the language over the substance. The analysts, the funds, the market culture that treats the word AI as a proxy for the future. The people caught in the middle are ordinary investors and employees. You're being sold a story about transformation when the underlying business is still, fundamentally, about making sandwiches profitably. The last piece is the one that reframes everything. Because here's what the sandwich shop actually understands better than most tech founders. Jersey Mike's is a genuinely good business. Real locations, real revenue, real franchisees, real cold cuts people actually pay for. It does not need AI to justify its value. And that's precisely the point. When a company with a solid, boring, profitable model still feels obligated to sprinkle AI language into its IPO filing, you're watching a market that has stopped rewarding reality and started rewarding vocabulary. Now, the twist I promised you. The presence of AI in a sandwich chain's paperwork isn't a sign that AI is everywhere and powerful. It's the opposite. It's the clearest signal yet that we've hit peak hype. The moment where the word has been so thoroughly divorced from meaning that it shows up in places where it does nothing at all. In bubbles, this is a recognizable stage. When the language of a technology outruns its actual deployment this badly, the correction is already loading. Here's my prediction, and I'll be specific. Within the next 12 to 18 months, the SEC and serious investors will start scrutinizing AI claims in filings the way they eventually crack down on vague crypto and blockchain language after 2021. AI washing is already a term regulators use. The companies that treated it as a magic word will get burned. The ones with real revenue, sandwiches included, will survive, exposed but intact. None of that was the real problem though. The real problem is that you can no longer trust the word AI in any corporate document to mean anything. You have to look at what the business actually does. Before I go, here is your tech tip of the day. When you want to know if a company's AI claims are real, don't read the press release. Read the 10K risk factors and the capital expenditure lines. Companies genuinely investing in AI show it in spending and compute, data infrastructure, and engineering headcount. Here's how to check fast. Pull the filing from the SEC's Edgar database, hit Ctrl+F, and search artificial intelligence and machine learning. Then count the mentions in the marketing sections versus the actual financial statements. If the buzzwords live only in the glossy, forward-looking language and never touch the numbers, it's theater. Real investment leaves a trail in cash flow, not adjectives. This one trick separates companies building something from companies chasing a stock bump. That is your tip for today. So next time you bite into a sub and someone tells you it's powered by AI, you'll know exactly what that word is doing. Tell me the most absurd AI claim you've seen in the comments. That's it for today. Subscribe to FutureEdge. There's a new one every day.